Okay, hello and welcome to our latest urgent market update video, where you're probably more than familiar with the conflict that we've seen escalate between Iran and Israel. So we want to have a deep dive into exactly what that means for these financial markets. So without further ado, let's get straight into it. Then we'll, of course, start with our risk warning. Take a brief moment, familiarize yourself with our risk warning currently up on screen. And during times like this, it is important to make sure you've got an extra focus on your downside exposure. So knowing what that is, be comfortable with that exposure. Perhaps take steps like mitigating risk whenever you get the opportunity to do so. And know that it's really going to be an event which is going to be very, very volatile. And we will get perhaps a period of indecision and uncertainty. Okay, so let's get straight into it then. I just want to bring this page up first just to sort of explain in a little bit more detail. We've got a couple of images. Now, it's quite interesting to do a little Google search, and if you put in, Israel's attack on Iran, you actually get limited headlines or limited. I was looking for, a suitable image to perhaps put up to just sort of reaffirm the conflict and the attack from Israel overnight on military targets in Iran. So what you've got instead is just sort of headlines from different important websites. So Israel attacks Iran, what we know so far. Make a deal or attacks will be more brutal. This is Trump warns Iran after Israeli strikes. We had Marco Rubio this morning claim that they didn't know anything about the attacks. We'd find that very difficult to swallow. Yes, of course, Israel is a sovereign country and they can make their own decisions, but they generally do so with American approval, let's say. Then we had Donald Trump slightly contradicted that particular narrative that we didn't know, saying that he actually warned Israel, perhaps against the attacks, but Israel didn't listen, which means obviously there was some conversations going on. And just at the bottom there, Israel attacks Iran and declares emergency over expected missile and drone retaliation. So this is really the indecision. This is the element of this conflict which there's a huge amount of unknown, and this is where all the uncertainty comes from. From the Tehran Times, you can see the headline there: unparalleled resistance against global powers bullying. So this is very much from the Iranian perspective. They believe the West, led by America and Israel, are really sort of power brokers in the region, and they've very much the bully in the situation and the dynamic. Now, from the Israeli and US side, we know the Houthis have been supported, according to the Americans, by Iran. A lot of this state-led terrorism in the region is often funded from Iranian sources. So we do have this backdrop ticking away continuously. We've had Iran attack Israel. You might remember from, I think it was the best part of sort of 7, 8, 9 months ago, if I'm not mistaken. You saw the Iron Dome sort of take these missiles that were launched from Iran. Most were defended against. I think one or two got through, if I'm not mistaken. But this just sets up the reality on the ground, which is we've now got an increase in conflict from Israel towards Iran, and Iran are sort of putting out this defiant sort of message that there will be retaliation. So this is probably the beginning of probably a very, very nasty conflict. So the questions we kind of want to ask ourselves is, what does this mean for these financial markets? So we'll do two things. We'll have a look at some of the world's largest markets, and we'll see, right, well, what's been the response so far? So what we've had is a bit of a risk-off market dynamic play out. And we see that with a bit of weakness in the S&P and the NASDAQ. And what we've seen is a bit of the dollar strength, literally overnight since we've seen that. Now, when it comes to commodities, we'll just demonstrate what's the response we've seen in markets like oil and gold, very much this move. And again, this is on the daily time frame. So we pretty much saw this particular move. So with this in mind, what you can see currently up on screen is a little bit of a pullback in those markets just over the last few hours. Pretty much across the board. So we've initially had a bit of an initial risk-off response since sort of midnight last night. Risk-off across the board, it seems. Now, bond yields have remained relatively calm and relatively stable and quiet. So the moves are playing out across the indices, across the dollar pairs, and broadly across some major commodities like gold and oil. So what we want to look to answer is, what does this conflict mean for financial markets, perhaps outside of the intraday volatility that we're seeing? The big move since last night to the downside in a risk-off sense, followed by a little bit of a positive bounce, and that's always a viable option. But we want to just sort of demonstrate where we believe, okay, we've had a little bit of a bounce, as you can see in this respect, but this is our overall bias in these markets, and I'll just make this a little bit bigger. So for the indices, there's other reasons for this particular bias, but once we finish pulling back, our bias is that we anticipate we're likely to edge lower. Our bias for markets like crude oil, we're getting a bit of a pullback, it's fair to say, but our bias is very much to the upside. So we think crude oil, once we pull back, and it might pull back a little bit more, but there'll be some great opportunities to perhaps expect crude oil prices to rally above those sort of $73, $74 highs that we saw overnight. And our bias, okay, we've got this little pullback in markets like crude oil and gold, but our bias, let me just change this to just give you a little bit more context about the trade. We appreciate we're currently in this little pullback phase across these markets, but we're looking for the next directional bias, which we think for gold and oil will be to the upside. Now, depending on how this conflict plays out, that's going to be the real arbiter in terms of whether we get further risk-off moves. If the conflict continues over the weekend, don't be surprised if we see these markets lower going into early next week. If there is some sort of truce, some sort of short-term truce, you could argue, sorry, that is actually a bearish move. And at the moment, we're actually sitting on the side of further weakness in markets like the euro dollar and the pound dollar. Now, we've been really quite bullish, or should I say we've been really very, very bearish the US dollar, but bullish the euro dollar and the pound dollar. So putting all these things together, and to just summarize, we anticipate conflict to continue to escalate in the Middle East, which is likely to have a very significant direct impact on things like the supply of oil. The supply disruption is fairly limited right now, but if the conflict escalates, then that particular dynamic can shift very, very quickly, and we could be up at $75, $80, $85 very, very quickly. We've rallied from $63 just on Wednesday, $63 on Wednesday, and we rallied up to $74 just a few hours ago. So we are currently experiencing a pullback, a bit of softening, but our bias is for further upside. So we're going to see if we can try and take advantage of some of these very significant directional biases. Now, the only one that we've really got a significant question mark, the dollar pairs. This is a market where we would have a little bit more of a question mark, because really we're just not too sure if the dollar itself is going to be this risk-off safe haven. We've got dynamics in play which suggest that that might not be the case. So just to summarize then, our overall directional bias outside of intraday volatility is very much to the downside for the indices. Short term, we then ironically have probably more of a longer term view, but there's a number of issues which have yet to play out for these equity markets. And then when it comes to commodities, really, we could probably only see further upside in gold and oil, with a big question mark over the US dollar. Okay, so look, that just about concludes this urgent market update video. These are opportunities to obviously keep an eye out for and monitor the headlines, and you'll be able to see the impact that these things have on the news as things unfold. So with a lot of uncertainty ahead of ourselves, let's we have a particular bias which is important, we have a particular expectation, and then our job as traders is to try and benefit from that expectation. So look, if you've got any questions about anything covered in this short video, then feel free to email us at support@LiveTradeRoom, and we will get back to you as soon as we possibly can. And all that's left for me to do now is to thank you for your time, much appreciated. Do stay tuned for our next video. I'm sure there'll be a lot more frequent now that we've got these major geopolitical developments underway. So so we look forward to seeing you next time. So for everyone here, do take care of yourselves, and we shall see you next time. Bye for now.